Crypto still doesn't feel very exciting right now. Prices are struggling, sentiment is weak, and depending on what part of crypto Twitter you look at, you'd think the entire cycle is either over or one candle away from collapsing. But underneath all of that, something interesting is happening. We're getting a steady stream of developments involving major banks, Wall Street, Ripple, XRP, stablecoins, Visa, MasterCard, and even the White House. And no, none of these stories by themselves tell us that the market is about to explode higher. But when you put them alongside a market that has already spent a significant amount of time working through this bottoming region, it starts to make the current environment look a little different. So today, rather than trying to force all of these stories into one giant narrative, we're going to take them one at a time. What happened? Why does it matter? And could these developments be signs that the market is getting closer to the point where the long bottoming process finally comes to an end? Before we get started, this episode is for informational and educational purposes only. Nothing in this video is financial advice. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse. There are lots of stories to get through today, and I actually think this is one of those episodes where the individual stories are more interesting than trying to come up with one giant headline. Because we have several completely different developments. A major White House crypto meeting, Ripple working with another regional bank in Korea, Morgan Stanley reporting exposures to XRP ETFs, Bank of America increasing some of its crypto ETF exposure, XRP Ledger activity remaining elevated even as social sentiment falls, Ripple expanding into corporate treasury infrastructure, and Visa looking for new stablecoin settlement partners. Then of course, there's the Bitcoin question. Are we still in the middle of the bottoming process? Or are we getting closer to the point where this market finally starts moving again? We obviously don't know the answer yet, but there are some reasons to remain hopeful. Let's start with Washington. One of the biggest stories is the reported White House meeting happening today involving major names from both crypto and traditional finance. Executives from companies including Coinbase, Ripple, A16Z, and Chainlink are among those expected or invited. And then you have SEC Chairman Paul Atkins expected to attend as well. Executives from Kraken, Gemini, the NYSE, and NASDAQ have also reportedly been invited. That's a pretty interesting group, but I don't think we need to overcomplicate what this means. It doesn't mean every regulatory problem is suddenly solved. It doesn't mean a major piece of legislation is guaranteed to pass. And it certainly doesn't mean the market has to react positively. But it does show that crypto continues to have a seat at the table. The conversation around crypto has changed dramatically. A few years ago, much of the debate was about whether regulators would allow the industry to develop. Now we're seeing regulators, exchanges, blockchain companies, and traditional financial market institutions participating in the same discussions. That's progress. And for the market, regulatory clarity has always been one of the biggest potential catalysts. So I'm watching what actually comes out of this meeting. Not rumors, not speculation, not social media predictions. The actual developments afterward. Because if we start seeing more clarity around how digital assets fit into the financial system, that could remove another layer of uncertainty that has been hanging over the market. And when you're already coming off an extended period of consolidation and weak sentiment, removing uncertainty can become increasingly important. And connected to that is SEC Chairman Paul Atkins. The fact that the SEC Chairman is expected at the meeting deserves its own discussion. The SEC has obviously been one of the biggest sources of uncertainty for the crypto industry over the last several years. So having the current chairman directly involved in these conversations is something I'm going to be watching closely. Again, this isn't a guarantee of anything. Regulation is complicated. There are still disagreements over jurisdiction, market structure, and how different digital assets should be classified. But the important part is that the conversation is happening. And eventually, markets need clarity. Businesses need clarity. Investors need clarity. Financial institutions certainly need clarity before committing significant resources to an emerging asset class. So if we're looking for reasons to be hopeful about the next phase of the market, regulatory progress belongs on that list. Not because it guarantees higher prices, but because it potentially removes one of the biggest obstacles standing in the way of broader participation. Now let's move over to Korea. Ripple announced that Jeonbuk Bank has become the first regional bank in Korea to deploy Ripple's payment infrastructure. According to Ripple, the system is designed to replace multi-day SWIFT transfers with near real-time 24/7 cross-border settlement for business customers. And this is the kind of story that's easy to overlook. There isn't a huge price chart attached to it. There isn't some ridiculous prediction. It's simply a bank implementing financial infrastructure. But that's actually what makes it interesting. The financial system moves an enormous amount of money every day. And one of the biggest problems with international payments is that the underlying infrastructure can be slow and complicated. Multiple banks, multiple currencies, multiple intermediaries, different operating hours, different settlement systems. Blockchain technology potentially gives financial institutions a way to make that process faster and more efficient. And Ripple has spent years positioning itself in that specific area. Now, we should be careful here. Ripple adopting blockchain-based payment infrastructure does not automatically mean every transaction uses XRP. But it does show that the technology is moving into actual banking environments. And for XRP investors, that's something worth following, because the long-term story has always been about more than retail speculation. It's about whether digital assets can become useful pieces of financial infrastructure. Now let's look at something completely different. CoinDesk reported that XRP social sentiment had fallen to a 3-month low. Normally, that would sound pretty negative, but then there's another number sitting right next to it. The XRP Ledger was recording nearly 50,000 daily active addresses, its highest level in more than 2 months, according to the report. And this is one of those situations where I think the contrast is more interesting than either number by itself. People are becoming more negative, but activity on the network is increasing. Those two things can happen simultaneously, and they often do during difficult market periods. When prices aren't moving the way people hoped, social media sentiment can deteriorate extremely quickly. People lose interest, people stop talking about the asset. Bullish predictions disappear. But actual network activity doesn't necessarily follow social sentiment. And that's something I like to see. It doesn't mean the XRP price has to go up. It doesn't mean that 50,000 active addresses guarantees anything. But it does suggest that the network isn't simply disappearing while sentiment is weak. And that's relevant when we're trying to determine where we are in the market cycle. Because if this really is a late-stage bottoming environment, you would expect some of the strongest hands and actual users to remain active while speculative interest fades. That's potentially what we're seeing. Now let's talk about Wall Street. Morgan Stanley recently filed its 13F showing positions across multiple XRP ETFs. The filing reportedly included exposure to the Franklin XRP ETF, Rex Osprey XRP ETF, and Bitwise XRP ETF. And I want to be very clear about what this does and does not mean. This isn't Morgan Stanley putting its entire balance sheet into XRP. We're talking about exposure through investment products, but that's still significant because XRP now exists inside a structure that traditional financial institutions can actually access. That's a big change. A bank or investment manager doesn't necessarily have to figure out how to directly custody XRP. It can purchase an ETF. It can account for that position like other securities. It can report it, and it can adjust its exposure. That's how an asset becomes easier for traditional finance to access. And I think the most interesting part isn't necessarily the size of Morgan Stanley's position. It's the fact that the position exists at all. This is Wall Street becoming increasingly comfortable with the idea of XRP exposure. And if these products continue to mature and attract liquidity, it creates a much larger potential pool of capital. Again, that doesn't guarantee price appreciation, but it changes the market structure. And that's something worth watching as we get closer to the next major phase of the cycle. Then we have Bank of America. The filing highlighted in today's material shows the bank increasing exposure to several crypto ETFs. The reported holdings include exposure to XRP through an XRP ETF alongside Bitcoin and Ethereum products. And once again, the important distinction is that this isn't the same thing as saying Bank of America is directly buying XRP for its corporate treasury. We're talking about ETF exposure. But I actually think that's a more interesting story than some of the exaggerated headlines would have you believe. Because what we're seeing is traditional financial institutions becoming increasingly comfortable with digital asset investment vehicles. That matters. The ETF structure has essentially created a bridge between traditional capital markets and digital assets. And as more institutions gain access to that bridge, the potential pool of capital becomes much larger. That's one of the reasons I remain hopeful about the broader market. We're not looking at an industry that's standing still. Even during a period where prices are frustrating investors, the investment infrastructure continues to develop. And this is where I think it's important to avoid getting carried away. You'll see headlines saying things like, "Bank buys XRP, Wall Street is loading up, institutions are going all in." Sometimes those headlines are based on real filings, but the headline can make the development sound much larger than it actually is. That's why I prefer looking at the underlying data. If a major financial institution has exposure to an XRP ETF, that's positive from an adoption and accessibility standpoint. But it doesn't necessarily mean the institution is making a massive directional bet on XRP. And honestly, we don't need to exaggerate these stories. The real story is already interesting enough. XRP ETFs exist. They're trading. Institutions can access them. Major financial firms are reporting exposure. And this is happening while the overall crypto market is still struggling to find clear direction. That combination is encouraging. Now let's go back to Ripple. Another story involves Ripple Treasury and its work with enterprises on treasury and financial forecasting. This might not get the same attention as XRP price predictions, but I actually think this is one of the more interesting developments. Corporate treasury is a massive part of global finance. Companies constantly need to manage cash. They need to forecast incoming and outgoing payments. They need to manage liquidity, to move money between subsidiaries. They need to deal with multiple currencies, and increasingly, they need infrastructure that can operate around the clock. That's where blockchain technology could become useful, not necessarily as a replacement for the entire banking system, but as another layer of infrastructure underneath it. Ripple has been steadily expanding its business in this direction. And again, we shouldn't automatically equate Ripple's enterprise business with direct XRP demand. But the more deeply Ripple becomes embedded in financial operations, the more relevant the broader XRP ecosystem becomes. It's another piece of the puzzle. Then we have Visa. Visa is reportedly looking for new stablecoin settlement partners, including companies with the appropriate regulatory licenses across markets such as the United States, United Kingdom, Canada, and Singapore. This is another story where the headline can seem almost boring, but stablecoin settlement is becoming a serious part of the financial infrastructure conversation. Visa isn't a crypto startup. It's one of the largest payment networks on the planet. And when companies like Visa start building around stablecoins, it tells us that the technology is being taken seriously at a very high level. Stablecoins offer something traditional financial institutions understand immediately: digital dollars, fast settlement, global availability, programmability, and potentially 24/7 movement. That's attractive for payments companies, and we're seeing the same trend for MasterCard. These companies aren't necessarily betting on one particular cryptocurrency. They're betting on the underlying technology, and that is a significant development for the entire digital asset market. And this is a trend I think deserves much more attention. We're increasingly seeing stablecoins move from being primarily a crypto-native product toward becoming a piece of mainstream payment infrastructure. That's a major transition, because once a technology becomes useful to companies like Visa and MasterCard, you're dealing with a completely different scale of adoption. It doesn't mean Bitcoin disappears. It doesn't mean XRP disappears. It doesn't mean every blockchain wins. In fact, it could create an even more competitive environment. Different networks will compete for payments. Different stablecoins will compete for liquidity. Different financial institutions will build their own systems. And the infrastructure connecting all these systems could become incredibly important. We're still early in that process, but we're clearly further along than we were a few years ago. Now let's bring this back to the market, because after hearing all these stories, there's still one obvious question. Why doesn't the price reflect all of this? That's a fair question, and I think the answer is that markets don't move simply because fundamentals are improving. Price is driven by liquidity, positioning, sentiment, macroeconomic conditions, and expectations. Sometimes the underlying story can improve while the market continues going sideways. And sometimes that's exactly what happens during a bottoming period. The market becomes boring. People get frustrated, attention disappears, volatility declines. Investors start asking whether the cycle is over. And then, eventually, the balance between buyers and sellers changes. We don't know if that's exactly where we are right now, but it's possible. And that's why I don't think we should dismiss this period simply because prices aren't moving the way everyone wants. This is probably the question most people watching are actually interested in. Are we nearing the end of the bottom? I don't know, and nobody else knows with certainty either. But I do think that there are reasons to be hopeful. We've already gone through a substantial period of uncertainty. We've seen major pullbacks, we've seen sentiment deteriorate, we've seen investors become increasingly impatient. At the same time, we're seeing institutional products expand. We're seeing banks report crypto ETF exposure. We're seeing payment companies build stablecoin infrastructure. We're seeing Ripple continue expanding its financial partnerships. We're seeing regulatory conversations continue. And we're seeing network activity that doesn't necessarily match the extremely negative sentiment surrounding the market. None of these things tells us that Bitcoin has found its exact low, but taken together, they make it increasingly difficult to argue that nothing is happening underneath the surface. And that's why I'm leaning toward optimism here. Not blind optimism, not everything is going up tomorrow optimism, more like maybe we're getting closer to the point where this long period of uncertainty finally starts resolving itself. There are a few things I'd like to see before becoming significantly more confident that the bottom is behind us. First, I'd like to see Bitcoin establish a stronger trend rather than continuing to bounce around inside the same range. Second, I'd like to see liquidity improve across the broader market. Third, I'd like to see XRP regain important levels and actually hold them. Fourth, I'd like to see continued institutional inflows into crypto investment products. And fifth, I'd like to see sentiment start improving without the market becoming immediately euphoric, because that's the interesting part. The best moves often don't begin when everyone is already convinced. They begin when sentiment is still questionable. That's why this current period is worth paying attention to. If the market does eventually break higher, a lot of people who've become exhausted during this bottoming process may find themselves scrambling to get back in. And historically, that's when things can start moving very quickly. There's one more thing I want to emphasize. If we're actually approaching the end of the bottoming region, the transition probably won't look perfect. We could still get another sharp pullback. We could see Bitcoin retest lower levels. We could see XRP drop again. We could see another wave of negative headlines. And that wouldn't necessarily invalidate the bigger picture. Bottoms are messy. Markets rarely give investors a clean signal saying, "Congratulations, the bottom is officially over." No. Usually you only recognize it with hindsight. That's why I'm more interested in the overall behavior of the market. Are sellers still getting rewarded? Are dips being bought? Are institutions still building exposure? Is infrastructure still expanding? Is regulatory clarity improving? Are networks still active? Those are the kinds of things I'm watching. So that's where we stand. A White House meeting is bringing together major crypto and traditional financial players. The SEC chairman is expected to participate. Ripple continues expanding its relationships with financial institutions. John Book Bank is deploying Ripple's payments infrastructure in Korea. XRP Ledger activity remains interesting despite weak social sentiment. Morgan Stanley is reporting exposure to XRP ETFs. Bank of America has exposure to crypto investment products as well. Ripple is expanding further into treasury infrastructure. Visa is looking deeper into stablecoin settlement, and the broader stablecoin industry continues moving closer to mainstream payments. None of these stories tells us exactly where the market is going next, but that's not really the point. The point is that while prices have been frustrating, the industry hasn't stopped moving, and that's why I'm still hopeful. Maybe this is another fake out. Maybe the market needs more time. Maybe we get another leg down. We simply don't know. But if this really is the latter part of a long bottoming process, the developments we're seeing now could end up looking very different in hindsight, because the market doesn't always turn bullish when the fundamentals suddenly become good. Sometimes the fundamentals improve first. The market gets bored, sentiment collapses, and eventually price catches up. Are we there yet? Again, I don't know. But I think we're getting close enough that it's worth paying very close attention. And if you're watching this market right now, that's probably the most important thing to remember. You don't need to know the exact bottom to recognize when the conditions around the market are starting to change. We're going to keep watching it, and as always, we'll focus on what's actually happening, not just what people are predicting. If you enjoyed today's episode, make sure you subscribe to Ledger Pulse, and let me know in the comments. Do you think we're finally getting close to the end of this bottoming region, or do you think the market still has more work to do? Thanks for listening, and we'll catch you in the next episode of Ledger Pulse.